Hello everyone, my name is Gregory Schnazy and let's talk about Bitcoin Borrow Die. As always, these videos are for educational and entertainment purposes only. They are not financial or tax advice. Today's topic is navigating a Bitcoin hard fork. What is a hard fork? How can we deal with it? And what happens if Bitcoin hard forks again in the future? Bitcoin Borrow Die is powered by Bitstack. Build your wealth in Bitcoin terms. Visit us at trybitstack.com. The TLDR didn't watch for this topic is basically just do nothing. If you do nothing, you'll have assets on both chains and you can allow the market to choose the winner. This is by far the easiest and most conservative view or set of actions as a hodler. If you're a miner or node runner, it's a little bit different, but we'll get into some of the details in a moment here. So what is a hard fork? You may have heard this, hard fork, soft fork, but it's basically a permanent split in the Bitcoin blockchain where the two different chains or multiple chains after the split are no longer compatible. The nodes will not talk or operate with each other, and they're completely different assets. So a hard fork is a permanent split in the Bitcoin protocol. It would be a protocol level change. So like the 21 million block cap, or the size of the blocks, or the time between blocks. A lot of these rules around consensus would require a hard fork to change Bitcoin. They're not backwards compatible, which is one of the main things, as opposed to a soft fork, which is backwards compatible. So for example, you could run a version of the Bitcoin protocol before SegWit or Taproot were activated, and your node will talk just fine to all the other nodes. You won't be able to use the Taproot or SegWit features and new things that were there, but it's backwards compatible, so all the nodes can talk to each other. And then anyone who wants to follow the new rule set must update their software. You have to update it to split to a different chain. But this is one key part, especially from the holder point of view. If you hold Bitcoin on the main chain on Bitcoin, you would have that same amount on any other chain split or hard fork. So basically in this example here, we're looking at just like four normal Bitcoin blocks, like the last four that were just mined. And then for whatever reason, we wanted to launch a new version of Bitcoin, or somebody was going to make a different version or split it off. This is what a hard fork would look like. So your balance in Bitcoin would be the same up here, and then your balance in this new coin would be the same as well. But this new coin would follow a different rule set, right? So this was famously happened with Bitcoin Cash back in the day. But for future, so you'd have Bitcoin and you have your normal Bitcoin over here. At a hard fork, you would still have your regular amount of Bitcoin. Let's say you own one Bitcoin. Well, then after this hard fork, you'd own one Bitcoin on Bitcoin Cash, or whatever the new hard fork is. So because you have assets on both chains, you can just wait and let the market figure out which one is the winner and then plan accordingly, especially if it's not clear if you don't know. So what happens after a hard fork? It's two or more separate blockchains. You would have the original Bitcoin blockchain, what we call BTC. It retains the historical infrastructure, institutional trust, user conviction, but more importantly, it's operating under the rules that everyone bought into, the original Bitcoin. For a new forked coin, a hard fork, it's a completely separate asset. So depending on what rules were changed, it could be the size of the blocks, it could be time between blocks, it could be the total number of coins, it could be a whole bunch of different things. or how things get mined, or if they don't get mined, if it was like a hard fork to like a proof of stake type thing. But it's a completely separate asset, and that's one of the main call outs here. And then why would Bitcoin ever fork? So it's a very conservative ethos where we're developing slowly and trying to maintain extreme security. Most upgrades are soft forks explicitly to avoid a hard fork, network division, and to keep the network intact. Right? So for like major upgrades, hard forks are extremely rare because it divides the community, it divides the nodes, the miners. It's the new fork doesn't really have any infrastructure unless it was like brought with it or pre-planned. And they are utilized for foundational feature upgrades that cannot be executed any other way. And we haven't seen anything that would require that yet. And then the reason for this video today is just around quantum risks and the FUD du jour topic, where theoretically a quantum computer in the future could be able to derive a private key from a public address, and that would be a major security risk for Bitcoin. So whether we could fix this with a soft fork or a hard fork, assuming it would be a hard fork, this is how we could kind of determine our game plan to try to think about it before it happens. So we would have our regular quantum vulnerable Bitcoin up here. We would have, quantum resistant Bitcoin here. We would have one Bitcoin on each chain, and then we can allow the market to decide which one is the winner. And then doing nothing is the safest and easiest choice as a hodler. So as a node runner or as a miner, it's a little bit different. But historically, the main chain, the original Bitcoin, has always won. We get duplication. So when the chains fork, we'll have assets on both. So we can afford to wait and just let the market figure out what one is the winner. And then it doesn't require action on our part as a hodler. So we don't have to choose sides or move our coins or sell the other ones. You could if you wanted to. Like when Bitcoin Cash came out, a lot of people sold that and then bought Bitcoin with it. But you have to know, or you have to have like a high conviction that one is better than the other. One is going to survive and the other one is not going to survive. If it's not clear or you don't know, you can just have your assets on one or multiple coins depending on the fork, and the market will determine which one is better. And you already have coins on that chain, so you can just ride it out and the other ones will die and you would have your coins intact and you can keep moving forward. So the Bitcoin remains yours. It would be yours on the main chain, original chain, or on the fork chains. As I mentioned, you have the same amount of assets on each one. It's just operating under a different rule set. So we can let the market figure out which one is the winner and then act accordingly with more information. So this is just one way to kind of take a step back and think about if Bitcoin hard forked, if there was a new hard fork in the future, what would you actually do? What is your game plan? And my advice is basically to just do nothing, hang on, stay the course, let the market figure it out. Look at the price of Bitcoin Cash versus Bitcoin when those chains split. And it's very clear that Bitcoin Cash just basically goes down to the right. It was a failure and didn't work. And Bitcoin is what it is today. So after a future hard fork, if one ever comes, you'd have your assets on both chains. Let the market figure it out, and then you can act accordingly. But it's really important just to kind of understand what hard forks are and what your game plan would be when it happens. So like this video, add some comments if you have any questions, and visit us at bitcoinborrowdie.com.